Good evening, I'm Giuseppe Basili. I'm the essential you can find at the website www.fibstalker.com. I also post regularly on Twitter using the @fibstalker nickname. Good evening, it's deep night here, October the 2nd. It's 2:30 a.m. in the morning in Toronto. And in this video, I'm going to provide for you a midweek update. I only send this video, normally send this video to my newsletter subscribers, but I'm going to provide this video tomorrow also on my blog and social media. So let's start from the euro dollar. On Tuesday I was on Dale Pinkert's LAR live, and actually in that occasion I've analyzed the current situation of the euro dollar, and I showed a potential level where the 4-hour participation would actually not be interested in shorts anymore, and that level was at 126.40.50 here, 49.50. Price went above it, and to me that's an indication that 4-hour time frame is not interested in short anymore here. Now this could be the start of a reversal, and that reversal could actually accelerate during the ECB meeting, and if that's the case, it's going to be very difficult to enter this reaction higher. Now we also have to mention that there is another level that I want to watch, and I want to be broken, then the lows to lows here, and this 61, the 127.51 is going to be the level where also the daily time frame now won't be any more interested in shorting this market. So if you want to be aggressive, you can try to pick up price at these levels. Let me show you what's going on the 15 minutes here. On the 15 minutes we have we actually have a sequence of measure move that has failed. Let's see the 4-hour here. The 4-hour we had actually this measure move hitting first and second target. I showed you this also on Tuesday in the LAR. If you want to watch that interview, I'm going to link that into my newsletter as well, and tomorrow I'm going to publish that on my blog. And the next measure move brought price into first target and second target, and the next measure move failed. So as you can see here on the 4-hour time frame, this market is not more interested in shorting. Now the market is coming back and could be trading a very aggressive setup here, and that's really, you know, I never recommend to be aggressive in the market, because the market can do anything. But here there is clearly a level 126.22 that with a stop at 126.9, so it's going to be 13 pips here of setup, of risk, absolute risk, and there is the possibility for this market to bounce. So if the market bounces and never goes below 126.09, that becomes an opportunity to get long this market, and I explained you why. Moving to the S&P 500, this market has kept moving lower here and went well into that area I've indicated. That was indicating a first target rather than 1948, but the market continued lower here, and actually the market is actually trading this busted setup here, and we have to respect that. Although it was busted, the market was pushed by the smaller time frames into that second target, and at the moment we are going to look at this market and look whether it continues lower and trades into the next short here, 1945. The first target of this extension would be 1928. The second target will be right at 1919 and 1920 here, and that's the next weekly measure move higher. So that's where this price could stop. So at this moment, if we move above 1948, I wouldn't take that just yet as a confirmation of resumed longs. I want to remind you that this market on the weekly time frame, it's in extension long. So So the resumed confirmed longs at current lows would be if we go above 1962. If we stay below this 1948.50 here, we might continue lower into 1920, and that would be the next important area of support. So this chart is a little bit confusing, but the levels are very, very clear. If you need information, drop me an email and I'll try to clarify here, but it's very, very clear anyway, and it follows what we said, with the only difference that we got a busted setup here that eventually was pushed by price on the smaller time frame into first and second target. So we are continuing this measure move short. Dollar index, not really a lot to say here. We saw this, we had to chase a little bit the anchor for this market. Eventually we found it, first target hit, second target hit. Now if we use the last anchor, then this market is showing the same behavior that we saw on the euro dollar, so it means that the whole sequence of measure move higher has failed. So you know what I think about this market. I also showed this on the LAR the other day, and there is a possibility of a retrace all the way into 83.85 here. Gold is still respecting the last measure move I gave, 12.33 here. Price got into it, never broke above 12.39.70 here, and continued lower. Now will it continue lower? We don't know. We have at first target an 11.95, so only if it breaks above 12.39 I will be inclined to then buy the next measure move long into at least the all the way halfway back here. That is going to be the 12.75. So there's a possibility to trade this market if it breaks above 12.39.70 here and then retraces. That would be a long. However, like I said, for the euro dollar, if you are more aggressive, again, mind risk. This is a game you win in defense. You can take a long trade here with a stop below lows. I don't recommend that. That's very aggressive. But if you have experience, you can do that. If you don't have experience, I never say that, and I don't want you to lose money. US dollar versus Japanese yen here. Congratulations to those who took my signal here on Sunday last week. I provided this setup, entry 108.43 with a stop below 108.17, so 16, and that would have been a 27 pips trade with 150 pips of gain here. It's almost 6 reward to risk. This is the kind of trades I'm looking for. Very, very important. And in this case, you could even trade without using the fib stalking technique to time. I never recommend to trade like that, but in this case it would have worked actually. The euro versus Japanese yen on the other side initially found support at this 138.54, but actually the weakness of the euro in the last few days actually took over here. So what's going on at the moment in this market is that this market has the potential to retest the 136.74, and actually the euro is showing even more weakness than the Japanese yen at this stage. Of course, this 136.74 is a very important area, and again, what will happen is that when you trade these weekly big levels, of course, you try to enter with a very good reward to risk and a very good position, and you try to let it go. Sometimes we have to time again and again and again and again these trades, and I believe the US dollar versus Japanese yen, it's a clear indication of this. As you can see here, this was tested. This area was tested 12 times, and so what can happen in the euro here is that euro Japanese yen, we go back to this level, and if the sequence of measure move fails here, it's a long. And that's the way you trade the market. You have to be patient and you have to generate free risk trades. There are no other ways to be consistent in the market. by taking a big risk on not well thought ideas. Now, moving to the pound versus Japanese yen, which you see here, it's again a level that actually, an area that actually starting at 177 that was initially respected probably for this trade, and then eventually this level was taken out. Fine, I mean, this is a break-even trade, no need to panic here. What is important is that we hit a target of an inner measure move here, and I'm going to show you the first target here. That was the 178.06. We went higher, we didn't get to the second target, so next measure move, and where we expect this price to find some kind of support, and this is in line also with the strength that we should see in the euro area possibly soon, if that violation that I showed you before it's real. So again, when the sequence of measure move, and if the sequence of measure move failed on top of this 175.02, then it's going to be a potential long. If you have short, keep the short till 175 area. Moving to the euro versus the Canadian dollar, you know that on the weekly and daily time frame, this market has violated this sequence of measure move lower. So there is no interest from weekly and daily time frame to keep pushing this market lower. If this market is going lower, it's because of activity on the smaller time frame. And let's go and look where this activity is. So we have a measure move short here that actually hit target, and then the market went to retest the all the way halfway back. So this is the setup we are in at the moment, and this setup is actually very close to the target here. So we actually get to that, and after that, you know, if we get to that level, after that we will trace the next measure move and see whether price comes back, and if it breaks that level, that would be a good indication that we are back in long here, like for all the other markets. So the EUROCAD, we know that the weekly and daily time frame are not interested in shorts now. As soon as also the smaller time frame will lose interest, there's no other direction for this market to go than up. So that's what I'm going to look for in this market. Pound versus the US dollar has been weaker. You will remember that I mentioned an important level 160 back when at the beginning of July here. We had actually 2 months here of move lower, and I needed 160. The market, the low was 160.50. So anyway, congratulations to those who took shorts here, and there was a very nice sequence of measure move shorts in this market. Very nice, very clean, very high volume market here where program trading is clearly active. And then the market bounced higher, and again, once we saw the results of the Scottish vote here, I mentioned this measure move short 164.04, didn't trade it, but now we have an indication, a very important way to track this market, because the first target was hit, the second target was not hit just yet. We don't know if how this market is moving at the moment. If it retraces and breaks the 163.20, this is going to be a very important level, and from here we could see a sizable retracement. Now, I think this market, like the euro, it's doomed, meaning that we need to see the 160 before. I don't think that this market will actually be able to continue higher without retesting that 160. That's where the large participation from program trading is. So no way this is going to happen. So let's wait and see, and there is also the possibility for this market to just continue lower. Let's don't forget that. So this market could actually go and actually test the all the way halfway back here, and this would be actually the second target of this all the way halfway back, 161.39. Moving to the Australian dollar versus US dollar, you can see all these markets, they are all of them, they're breaking their sequence of measured moves. Something is changing here in the market, clearly. It's happening in all the markets, and that's an indication. So we might be very, very close to that jump higher. So be prepared for a hell of a short covering in all this market here. And if that's the case, this market has the potential to bounce very, very quickly into 089.51. And as you can see, people will invoke previous lows here, but the real reason, see the difference with traditional technical analysis. The real reason there is a bounce here, there is going to be a bounce probably, is not because we retested previous lows, but because the sequence of measured move induced by program trading has failed. And I'm going to show you this. I'll show you which is this sequence of measured move. First measured move 191.10, first and second target hit. Second measured move called before the fact, it's 089.06, first and second target hit. As you can see, around these areas, it's where program trading is taking profit. So the reason is the profit being taken on a sequence of measured move, and the next measured move not being respected. So 087.70 has been pierced on the upside. So this is an indication for me that something is happening here. So if we get a retrace into let me see the 4-hour chart. If we get a retrace into the old OLFA back here and it holds, then that could be a long. So you see the same pattern over and over here on all the markets. Something is happening here. And next is US dollar versus Canadian dollar, and congratulations to those who followed my advice. I mentioned very clearly that here this market did not have a long support, clear long support anymore, and this market retested this 108.06, went to the first target, next measure move failed, and that was an indication for me that something was fishy in this market. In fact, as soon as the market went into the first target area here, there was some profit taking, and also this market went into this 12.23, and let's look at the at the weekly time frame here. Can you see we are very close to that previous level of resistance where we had start of resistance? So clearly this market that already has confirmed this level of resistance here now is failing on the daily time frame. So price structure here is telling a story, is telling the full story actually. So I believe now that eventually this market is going to retrace all the way into the old OLFA back here, and we will get it from there. So it means that if we retrace higher, that becomes an opportunity to short this market. So as you can see, all these markets, they're showing the same pattern. This is reverse because of course it's the US dollar versus Canadian dollar, not the opposite. So again, if the market gives this opportunity, it's going to be a gift. It's going to be great. And if it gets into 111.47 and the sequence of measure proof fails, this is going to continue lower. That's a great opportunity for 10 reward to risk trade here if timed on the 15 minutes. Great trade. That's the kind of trade I'm looking for. And finally, the New Zealand dollar versus US dollar here. Again, same pattern here. And as you can see here now, the New Zealand dollar versus US dollar has confirmed also on the daily time frame. And again, where this market stopped, exactly at the level that I mentioned a few weeks back, the 77.05. Congratulations to those who timed this using the Phipps torquing technique, and that's the whole purpose of our trading and our job as traders, to take free risk trades here and low risk trades and make them free risk trades and ride them till the point where this market can actually give a move higher here. And make no mistake, the first area of strong resistance is going to be 080 here, and we will need to see whether the market will continue higher or will resume the move lower. This market could actually, after this move like this, could actually go and test this level and retest again the 077, which is a strong level now. And I explained the reason why this is a strong level in my coaching program. If you are interested and want to trade like I do, and analyze the market like I do, and you want to be on top of it and into these trades when they happen, and when everybody else, 95% of people is afraid of taking positions here, shoot me an email, fipstalker@gmail.com. Watch my videos and webinars on fxtrade.com, or watch my interviews with Dale Pinkerts on the fxtrade.com live analysis room. Watch almost 600 videos I have on my blog for you to review, where I made this call now for more than 2 years. And if you're interested, just let me know. And I'm starting a coaching program this Saturday. It's going to be introductory lesson, so you still have time, a few days. If you want to join, let me know. Thank you very much, and have a great evening, a great trading day tomorrow. Bye bye now.